how much do they have left in them?
Well, it depends on what scenario you believe in. So we did a very nice piece of analysis this morning that looked at a sort of an optimistic scenario, a pessimistic scenario, and somewhere in between. And the answer is it's anywhere between sort of the next 3 months and perpetuity. So it really comes down to how much cash can they liberate from these assets. Are they going to get the headline numbers that they're doing? It is a complicated deal. There are lots of caveats. There are multiple escrow accounts that are in turn dependent on various scenarios happening. So at this stage, it's very, very hard to tell. What I will say is the bonds are up slightly. The shares are obviously down massively, but I wouldn't pay too much attention to the shares right now because they are small.
So it's not really a supply chain, but if it's a kind of who's impacted by this?
I mean, the obvious hit initially is for the lenders. So it's people that hold the bonds, it's the banks that are lending them the money. And I think that this has been such a slow crash, for want of a better word, that people have had 2 or 3 years to get themselves out of those kind of positions. In terms of their trading environment, they're very much going for secured credit. So it shouldn't be too cataclysmic if the worst scenario happens, but we're not there yet.
Right. Will this lead to more regulation? I don't know who is to blame around this, but what will happen?
I mean, I think in terms of the way that the trading environment has evolved since the commodities crash, that was already underway. You know, when you have swings in prices like that, obviously people tend to react. They're taking money off the table. They're being a lot more cautious in how they're trading. I don't think that's necessarily going to change as a result of Noble. It's one of many, many stories going on in that particular environment.